All right, so welcome to the second lesson on the binary session. And just as I told you in the previous class, we are going to focus on the indicators and how to use them. So a quick recap of what we did in the previous lessons. We were able to identify the rules that each and every one of us needs to adopt once you want to be a binary options trader. And we were also able to understand what binary option is. We went on to talk about the assets, the various assets that we trade on the binary brokers, which we made mention of currencies, stocks, commodities, and cryptocurrencies. We also look at a few important things to note when you want to be binary trader. What kind of assets do you want to trade? What is your strike price? What time frame are you trading in? And then your expiration time. The strike price or the entry point and the expiration time is very important in binary options trading, because unlike forex where you have to use lot sizes, we don't do that in binary. So we also look at different brokers, and then when choosing a broker, what do you need to see, or what are the standards for choosing a very good broker? We look more into that, and then we went into when and how to take trades. When you want to take a trade, you want to buy or the call option, you need to know whether the sellers are done before you go in for the call option. And when you want to go for the put option, which is the sell, you make sure that the buyers are done before you go in for that. We look into all those ones. And then the question is, how will you know whether the buyers are done for you to do what? To sell, or the sellers are done for you to buy? And then we made mention that you'll be using the indicator strategy. So we listed some few indicators, and then we want to know how to use them or what they are. So we listed about 10 of them. Then we asked that each and every one of us do what? Read about them, so that in our next session, things will be very easy for all of us. All right, so that was the lesson in the previous class. So today we are going to look at a few of the indicators. All right. All right, so these are some of the indicators that we mentioned in the previous class. We have the Bollinger Bands, we have the MACD, we have the parabolic stars, we have the relative strength index, which we call the RSI. We have the Fibonacci retracement, stochastic oscillator, moving average, exponential moving average, the alligator, and then the Oxum oscillator. There are more, we'll be adding more, and even some that are not very much important, we can ignore them. All right, so we have the application of indicators. When you see an indicator, you don't just go and then apply it. How do you know that you need to apply this indicator at this particular point? What do you want to see on the indicator before you take a trade? Or how is that indicator going to help you to get a very good entry point? So let me take you to a very small English class. We have 4 things to note on every indicator. That is, what is the indicator? That is, when are you to use the indicator? That is, where are you to use the indicator, and how are you going to use it? All right, so when we talk about the what, this explains what the indicator is to you. It defines the general identity of the indicator. What is its purpose? So when you take an indicator like stochastic, what is it? What is a stochastic? You need to know what it is, or you need to define its general use. Then you come to when. This will explain the circumstance that will lead you to what? To use the indicator. Are you coming to use the indicator to check whether the market has reached an overbought stage, or you want to check whether you are having a trendy market, whether the market is trending upwards or downwards, or you want to check momentum? What do you want to see? Are you getting it? Now, the third one is where. Where are you supposed to use the indicator? This will help you to know the particular place to use the indicator. The indicator that you have activated on the broker, are you sure is going to help you get a good entry point? Is that where you are supposed to apply it? You need to know that. And how. The how, this helps you to know the process or means by which you can use it. All right, so next one. Now, every indicator falls under these 4 categories. The indicators that you are doing what? You are activating on your broker. Are you using it to check the trend, or you want to check momentum or volatility or volume? Now, the first one is trends. The trend of the market simply shows you the direction of the market at that particular time. So we all know that in Forex or in binary options, there are only 2 things that we focus on. Though there are 3, but the focus is on 2. That is whether the market is trending upwards or the market is trending downwards. And the last one is consolidating. That is an indecisive market. The buyers are what? Struggling with the sellers. So when it goes up, it comes down. When it goes up, it comes down. If you don't have a very good strategy, you need to avoid those kind of markets. So we have indicators that check only what? The trends of the market. So you need to know whether the indicator that you are applying, what are you trying to check? Are you trying to see whether that indicator will help you to know whether the market is trending upwards or is trending downwards? You need to know. Now, the second one is momentum. The momentum shows how strong a trend is and also giving you signals whether there may be any reversal of the trend or not. So there are indicators that will tell you whether, no, the way this market is trending upwards, it's not coming down anytime soon. So just be looking for what? A buy position still there. Or the way this market is trending downwards, it's not going up anytime soon. So you should just be looking for. So there are indicators that will show you that no, this market to stay at the down for long, or to stay at the top for long. So that is the momentum. So the indicator that you are coming to apply, is it coming to what? show you whether the market will still be in upwards trend or downwards trend. You need to know. Then we have the volatility, something that has the tendency to change rapidly. But in Forex, we are talking about how prices changes drastically over a period on a currency or on an asset. So there are indicators that will help you to know whether where this price has reached, whether it will change, it will fluctuate rapidly, instantly, or maybe it's coming down, it has to reverse and all those things. Then volume, the amount of units that are sold or bought in a specific period of time. This one, the Forex traders, they make good use of all this because they calculate their profits in pips and lot size and all those things. All right, let's move on. Now, our first indicator that we have here is oscillators. I hope I'm taking my time to explain the things one after the other so that nobody should get missed. All right, so the first one that we have here is oscillators. So just as I told you that when you see an indicator, you need to know what it is used for or what it is. You need to know when to use it. You need to know where to use it. And then you need to know how to use it. It's very, very important. Most of us used to apply indicators. We don't know what it is because they just told us to apply it and then we apply them. But until to when we are going to break everything down for you into detail to the lowest, the simplest level, so that when you are applying it, you know what you are doing. This is Forex autopsy that we are doing. All right, so we have oscillators. Now, about the what? They are used to show high and low bands between two extreme values of an asset. So Kofi is here, Ama is here. The gap between them, Kofi's price is what? 100, Ama's price is 20. So the gap between Kofi and Ama, that is what the oscillators are used to show. Now, when are you to use the oscillators? When an asset has reached its overbought or oversold state. So that is, let me give you a practical example so that you don't get confused. Now, those of you who don't have pocket option, I'll put the link in the group so that you can create an account, a demo account, and then once you are following this, you will not get confused. All right. Okay, let me continue. I'll come back to that. Now, I wanted to show you the overbought and oversold state, but definitely I'll come back to it. Now, where are you supposed to use these oscillators, or where are you supposed to see them reacting or see the strike price or the other strategies before you'll be able to what? To take the trade. Now, at the support or resistance level, the support and resistance level is quite technical, which they will take you through in the main Forex class, so that you know where your support is, you know how to draw your lines on the support or the resistance level. That is where, when the oscillator reach there, that is where you'll be able to what? To take your trade. Now, how are you going to use it? When it has every indication that it's going up or it's coming down. And it's going up for what? For a buy. And when it's coming down for what? A sell. So we have few examples over here. We have stochastic oscillators, we have awesome oscillators, and then we have accelerator oscillators. All right, so I'm just mentioning these things and then you will be confused. You don't know what is stochastic oscillator, you don't know awesome oscillator, and then accelerator oscillator. So when you come to your broker, this is what we call the broker, where you are going to do your trading. So when you come to this place, indicators, we have what? Accelerator oscillator here. This is it. This is it. Now, when you come here, we have what? Awesome oscillator. This is the awesome oscillator here. And then when you come here, the final one, which is the stochastic oscillator. This is the stochastic oscillator here. So I showed you the accelerator oscillator, awesome oscillator, and then the stochastic oscillator. All right. Okay, so now let's go back. Now the next one is moving averages. Moving averages. So moving averages are used to show the direction of the market. They are used to show the direction of the market, whether the market is going upwards or it's coming downwards. Now in the moving average, we have the most popular use, or these are the two that are frequently used, SMA and then EMA. So SMA, known as the single moving average. No, this one, they have some calculations that they used to do in the main Forex session. But then in the binary, we are just going to do some settings, which example of that settings, you set it on 50. It is going to show you the trend of the market. And then we have what? Exponential moving average. It also needs some settings before you can be able to use them. All right, so just as I did for the oscillator, let me quickly go there and show you what the moving averages are also. So I'm going to delete these three that I activated. So I'm here again at the indicators column. And then I've picked, you can see moving average over here. 1, 2, because I need 2. It can be 1, but because I want to show you the SMA and then the EMA, the single moving average and then the exponential moving average. So now you can see SMA here. When you come to this pen here, you click on this pen, you can change your settings, you can do your settings. So I told you that something like settings like changing the period like 50, maybe I can come here and change the color to blue. Your preferred color, any color you want. I can increase the size. You can see that it's still SMA. So I can save it, and then you can see that it's showing me what? A trend. So depending on your settings, that is when you will use it. So each strategy and then the settings that you do. Now, when I come over here, the second one, I can change it, and then maybe I can leave it like this, or maybe I can change it to 4 or 5, any number at all. And then when I come down here, you can see SMA, WMA, EMA, SMMA. So when I click on the what EMA, that is the exponential moving average. So I can save it, and then just as you can see EMA here. So this is what the exponential moving average, and then this one, this is the exponential moving average, and then this one is what single moving average. All right, so let's go on. I believe I'm taking my time one after the other. All right, so we have MACD. So now most of us have been using MACD, but we don't know the meaning of MACD. We don't know what MACD is used for. Now, all these indicators that we are learning over here, you'll be needing them in the main forex. So though they will teach you there also, but then it's important that you learn it here and then you learn it there so that you can have it boldly. All right, so MACD. What is the MACD? MACD means moving average convergence or divergence. So now let's break it down. Now the M, which is the moving, I know everybody understands moving. All right, so something that is in motion, whether data or matter, then it's moving. You are moving. You are moving from Accra to Kumasi, or you are moving from Japan to America. Yes, you are moving. All right. Now, average, a number that shows the value in a set of data, simply. In what we are not going to make, let me say, or it's not essential for us in the binary. There is no need cracking our heads on it. Now, we go to the C, which is convergence. So when we say something is converging, what do we mean by that? Moving towards one another in a uniform manner. So if you did geography, or the meteorologist among us, I think we have something called convergence in geography, where two flows or sources come together or move together and something like that. So if you are a Christian, Adam and Eve converge. Adam and Eve converge to give birth to Abel. So I hope you understand convergence. All right. Now, divergence. Divergence. Now, divergence simply means that you are going to Accra, or all of you, you were going to Accra, and then when you got to, where are you even coming from? All right, so let's say that you just change direction. Yes, you just change direction. You were going to the north, all of a sudden you change direction to the east, or you change direction to the west. But we know in forex or in binary, we don't have east and west. We only have up and down. If you are not going up, you must be coming down. So in this case, divergence, if it is going up, it gives a sharp turn downwards. Or if it is coming down, it has to go back. That is where the divergence is formed. So now we know what the MACD is. All right. So this shows the relation between two averages. That's the meaning of the MACD. Now it has three parts: the fast line, slow line, and then the histogram. So now, as usual, let's go to our broker and then choose MACD for us to know what MACD is or understand what MACD is. All right, so we come to our indicators again and then scroll through, and then you see MACD here. Click on it, and then you have your MACD here. You can see the lines over here. You can change the colors, and then you have your histogram here. So this is the MACD. Each of the indicators, they have their settings depending on the strategy that you want to use. All right, so now let's go back. I think we are going on to the final one, which is the stochastic. Now, we are now coming to talk about the stochastic. The first one we talked about was oscillators. So it is general, that is the compound name. Okay, so we go back to our what, when, where, and how. Now, the stochastic, it advises traders on the state of the market. Now, when are you to use it? When an asset has reached its overbought or oversold state. Now, where are you to use it? At the support or resistance level. And when are you to use it? When it has every indication that it's going up or it's coming down. So primarily, when the stochastic has reached above 80%, it is known to be what? Overbought. And 20% is known to be oversold. So depending on the strategy that you are using, you can choose to increase this number, whether to see it above 80, 90, before you take your trade, to be very confident. Or the 20, you can also choose to see it lesser than this. It all depends on you. So now let's go back and then we see what the stochastic oscillator is. I activated it early on, but then let's still go back and then see it. So now we have our stochastic oscillator here. So you can see that as I'm moving the mouse, you are seeing that the percentage is changing. Now it's at what? 63. Now it's what? 86. Now it's what? 14. Yes, that is how it works. So they say that when it's 80 or above, it means that what? It's overbought. So it can come down anytime soon. Just as you can see, this is what? 93. That's crossed. So sometimes it can even go to 97. So it all depends on you. And it can come down below 10, sometimes even 0 or 1, to know that it's oversold. So it can go up anytime soon. All right. So I think for today, we are done with a few indicators, one after the other. We'll be taking them one after the other so that nobody gets confused. Nobody gets confused. Wherever that you don't understand about the stochastics, about the MACD, the moving average, the oscillators, you can let me know so that we go over them or clarify it the more. So now let me just give you something here. Let me do some settings here. So I am going to have a 25 period for an exponential moving average, and then 5. All right, this one is set already. 5 for exponential moving average. And then I have my MACD here. So now let me look at something. Now look at a very strong signal here. Now see these two lines crossing each other. So the 5 EMA is crossing the 25 EMA. And at the same time, the MACD, one of the lines, which is the yellow line or the green line, is crossing the red one sharply at the same time. Look at it here. And at the same time, the bars is moving from the down to the top. So if you are a trader and you meet these particular settings, it gives you a strong signal that you should go in for a buy. And you go in for a buy, whether 1 minute, 2 minutes, 3 minutes, you win the trade. So you look for what? The intersecting points of what? Of the lines or of the exponential moving averages. This is just an example. We haven't come to any of the strategies yet. I just want to show you something for you to know that the indicators are very, very, very powerful. Very powerful. All right. So we'll bring today's session to an end and we'll continue with the rest of the indicators in our next session. So if you have any question, you can draw my attention and then take it from there. All right. Thank you very much and God be with you.